Hello everyone. Today we will talk about the roles of SEBI and its functions. SEBI being the Securities and Exchange Board of India. This is the second part of this video. If you haven't watched the previous or the first part of this of SEBI, kindly check in the channel and it should be there. Now, let's see the role of SEBI. SEBI was set up with the main purpose of keeping a check on malpractices and protect the interest of investors. It was set up to meet the needs of three groups: issuers, investors, and intermediaries. For issuers, it provides a marketplace in which they can raise finance fairly and easily. For investors, it provides protection and supply of accurate and correct information. For intermediaries, it provides a competitive professional market. Objectives of SEBI. The overall objectives of SEBI are to protect the interest of investors and to protect and promote the development of stock exchange and to regulate the activities of stock market. The objectives of SEBI are: first, to regulate the activities of the stock exchange; second, to protect the rights of the investors and ensuring safety to their income investment; third, to prevent fraudulent and malpractices by having balance between self-regulation of business and its statutory regulations; fourth, to regulate and develop a code of conduct for intermediaries such as brokers, underwriters, etc. The functions performed by SEBI. The SEBI performs functions to meet its objectives. To meet three objectives, SEBI has three important functions. These are protective functions, developmental functions, regulatory functions. Protective functions. It checks the price rigging, and price rigging refers to manipulating the prices of the securities with the main objective of inflating or depressing the market price of securities. It prohibits insider trading. SEBI prohibits fraudulent and unfair trade practices. SEBI also undertakes steps to educate investors so that they are able to evaluate the securities of various companies and select the most profitable securities. SEBI also promotes fair practices and code of conduct in security market. Developmental functions. SEBI promotes training of intermediaries of the securities market. SEBI tries to promote activities of stock exchange by adopting flexible and adaptable approach in the following way. SEBI has permitted internet trading through registered stockbrokers. It has also made underwriting optional to reduce the cost of issue. It has even made initial public offer of primary market. It's permitted through the stock exchange. The regulatory functions of SEBI. SEBI has framed rules and regulations and a code of conduct to regulate the intermediaries such as merchant bankers, brokers, and underwriters, and so forth. These intermediaries have been brought under the regulatory purview and private placement has been made more restrictive. SEBI registers and regulates the working of stockbrokers, sub-brokers, share transfer agents, trustees, merchant bankers, and all those who are associated with stock exchange in any manner. SEBI registers and regulates the working of mutual funds also. SEBI regulates the takeover of the companies. It also conducts inquiries and audit of stock exchanges. The changes that have been introduced in SEBI in the capital market. The T plus 2 trading settlement system, that is the trading and its charges that are levied, these are usually settled within 2 days of the trading. Dematerialization of the share certificates, which was implemented in the year 1999. Banned entry loads for mutual fund schemes in the year 2009. The task of giving approvals to the FII registrations was handed over to SEBI in 2003, that is, the Foreign International Investments. In order to discourage the FII investments made through the P notes Securities and Exchange Board of India has imposed sufficient checks and balances to avoid the flow of black money into the Indian markets. Strict vigil on usage of IPO issue proceeds, greater disclosure by companies and their bankers, and allotment of a minimum number of shares to retail investors. SEBI has also introduced e-IPO procedure for electronic bidding in public offers to help investors bid for shares in a cost-effective manner. In the year 1996 to 97, Securities and Exchange Board of India directed all exchanges to fix the daily price band at 10% and a weekly overall limit of 25% to curb undesirable volatility. To bring about a coordinated trading halt in all equity and derivatives market nationwide, Securities and Exchange Board of India introduced an index-based circuit breaker system applicable at 10%, 15% and 20% movement either way. The Securities and Exchange Board of India has a web-based centralized grievance redress system called SEBI Complaints Redress System (SCORES) for assisting investors to lodge their complaints in a structured way. NB International Organization of Securities Commission IOSCO under its Financial Sector Assessment Program, the FSAP, acknowledged that the comprehensive risk management framework prescribed by SEBI is one of the pillars of the Indian securities settlement system. Securities and Exchange Board of India distinguishes itself from other regulators in India as it is a financially independent regulator with its own sources of revenue. Thank you for watching this video. If you like this video, please hit the like button, and for more videos like this, please subscribe to the channel. If you like to contact and get more details, please contact the number currently on the screen.